A lot of people get intimidated by investing. This is because when they hear the word investing, they immediately think about the intimidating and complicated world of the stock market with all its numbers and charts. But don't worry. Today, we're approaching the scary world of investment and making it a friend. Hi, welcome to Grayson Finance. In today's video, I'm going to be talking about investing for beginners this 2022. Let's take, for example, that you have established a business. To be able to have that business to expand, you need to have much more money on hand. Now, the question will be, where will you get this money that you need to expand your business? Will you take debts for this expansion? Well, you can take debts if you want. However, there's a better way that you can try. You can break down your company into multiple parts. Sell some of its portions while the majority of it is still owned by you to stay in charge. This method of breaking up your company into parts and selling them is actually what the stock market is for and what it's all about. This particular method is also known as the initial public offering or IPO. Hearing this, you might be wondering how much money you can make. To answer this question, let's take, for instance, Facebook. In 2012, Facebook was made public with a whopping 337 million shares priced at $38 each. That entire share was completely well received by investors and everyone was taking part into owning some bit of the company. Mark Zuckerberg found out that more and more people wanted to buy more shares. That is why he had an additional 84 million shares on top of the 337 million, which made it 421 million shares in total. Soon after he did this, all 420 million shares were sold completely. While selling all of those shares, he was able to raise a great amount of money, 16 billion to be exact, which made him a billionaire just a few hours after selling the shares. This event was soon followed by an increase in stock price. It was increased to up to $45 per share on the first day of trading. With all these stocks getting sold out and a great amount of money pouring in, you might be expecting that Facebook was doing great, but the good times did not last that long. The stock price went down to $38 again by the end of the day, and the bad news was just beginning. After just a few weeks of sold out in shares, the stock price decreased significantly, with the value being priced to only $20. This value is more than half lesser than the original stock price at the beginning. In order to comprehend the situation, we must get to the root of the stock market first. Back in the past, stocks were acquired mainly for dividends. In theories, if you purchase a stock, you become an owner of the company together with many others. You, as well as other owners, are entitled to the profits the company will make. For instance, if you acquired stocks from Facebook back in 2017, you also became one of the owners of Facebook, together with Mark Zuckerberg being a co-owner too. With Facebook earning $16 billion and you having 10 stocks bought at the price of $1,300 in totality, computed with Facebook's stock price in 2017, how much money would actually belong to you? You can compute how much money you will get with your stock by finding out how many stocks there are all in all. In 2017, there were almost 3 billion of them, with the exact number being 2.956 billion. With this huge number of stocks, you might be thinking that your stocks aren't really something that would matter, but let's try to be more optimistic about the situation. If we're going to compute your income, the thing that you need to do is divide the net income by the number of shares. After computing, you will be left with the answer. Each stock will be earning $5.39 each. The amount of money you earn per share is called earnings per share, or EPS in short. And because you own 10 stocks, your earnings should be the exact amount of $53.9, and that's not too bad if it's true. However, all of these are just in a hypothetical sense, and when it's in practice, you actually get nothing. On Facebook, there's a board of directors left with the decision of what should be done with the money. All members of this board of directors will then prioritize filling up their bank accounts first, as well as expanding the company. With this, your 10 stocks will become something that no one actually cares about. Back in 2018, Apple paid a huge sum of almost $13 billion or $12.7 billion exactly in dividends. This makes up the amount of getting $2.5 for each stock, while the stock is priced at $170. While this is very little money, it is still significantly greater that you receive something than the nothing that Facebook offered. Nowadays, it's not so much of a big deal, no matter how much money the company pays, as much as the price of the stock. Apple actually had a gain of more than 30% in just a single year, which is actually a lot better than the market's average. It's a well-known fact that Apple became the first company to cross $1 billion valuation. The reason for this is that their stock price crossed $200. In 2014, Apple's stock price was valued at a whopping $654. With that, the question that may arise is, wouldn't that mean that the company's value should be more than $3 billion during 2014? Well, the stock market can be a little bit confusing. To explain this situation, let me introduce to you a thing called stock splits. In stock splits, each stock is split into 7 parts and prices lessen proportionally. In an overview, nothing changed much except that more people can avail of the stock and be an Apple investor because of the affordable price. However, not all companies do stock splits. There are a lot of companies out there that only accommodate a few serious investors. Let's take, for example, Warren Buffett. Buffett, with his company Berkshire Hathaway, has never done stock splits ever before. With this, the company only has almost 2 million, making it a significantly lower number than Apple's, which is 5 billion. Since the shares are not split, we can already assume that it is highly priced too. A single stock from Berkshire Hathaway will cost you more than $300,000. This price can be too high for some investors, so Buffett created a cheaper alternative. He started selling Class B shares, which are priced at only $200. There's still a lot to learn about investing in the stock market. For now, this had been a simplified introduction to investing for newbie investors to get you on the right foot before taking the rest of the steps into investment. If you want a few more tips, check out some of our other videos on investment, financial practices, and many more. You can also begin to look into different companies you might want to invest in the future. And who knows, you might find the one for you after this video. Just be sure to always remember, it's your financial future and nobody else's. You're in complete control. Thanks so much for watching. If you like this video, make sure to press like, subscribe, and hit that notification bell to keep you posted on new helpful videos.